Hi, Jennifer. Good morning.
Hi, good morning.
It's so nice to see you again. And
Yes,
I'm so excited to talk about this renovation um, home loan and what we're going
it's
to be discussing today.
a great program, a great option for some people.
So, what is this program called? What are we going to be discussing today?
So today we're going to talk about the FHA 203K program. So it's a rehab or renovation loan, like you might hear about, but it's through the FHA. So it allows you to have lower credit scores and a lower down payment. So it's kind of the beauty of being able to use the FHA program for a rehab or a renovation.
So, what are the minimum credit scores requirements for this specific program?
So again, you're gonna see across the board, the FHA requires a minimum of a 580 credit score. But we still have to pass through the automated underwriting system. So sometimes, and then especially with the rehab loan, the automated system at a 580, it might not push through. So I like to tell people a 620, but technically we can go down to a 580. It's just a matter of if the automated system will approve it or not at that score.
So, there's going to be two 203K programs that we're going to be discussing today, right? One is going to
Yes.
be the limited one, and one
Mhm.
is going to be the standard. And as we go through it, you'll be able to see the difference between the two.
Right, yes.
So is there a specific down payment required for the standard program?
So both of them only require a 3.5% down payment. The difference is really the amount of rehab that you're going to do. That's where you're going to see the difference between the limited and the standard. But both of them, you only requires 3.5% down.
So let's talk about the limited program. Let's
Okay.
start there. So when we talk about that program, is there a cap on repairs that you can use for that specific program?
Yes. So that's what makes the program limited, is that you are limited to $35,000 in repairs. So if you hop on Google, you're going to see you can do $35,000 in repairs. However, the program does require a 10% contingency. So that contingency is, oh shoot, we pulled up that countertop and it got measured wrong initially, and so it's going to cost $500 more, and so $500 here and $500 there is going to add up. So that's where the 10% comes in, for just in case. And so really you're going to be limited to about $31,500 in repairs for the limited program.
So 31,500, and then the 10% covers, unforeseen items.
Right.
So with the 10%, that goes up to the 35,000.
35. Yep, exactly.
And so when we're talking about this program, since it's FHA, what is the limit for the loan amount?
So it's going to depend on what region you're in. So mainly you're working in the Marion County, Polk County areas. So that we're capped at $483,000 for a loan amount for this Marion and Polk County in Oregon. So 483 would be your cap, which would be, you're going to take your purchase price plus the repairs. And they just have to be below that 483.
Yeah, a total amount for everything.
Yes.
Wonderful. Okay, so let's talk about down payments for, like, for example, your secondary home. If you decided to purchase a secondary home or an investment properties, is that down payment going to change?
So actually, for the FHA program, we can't do any second homes and we can't do any investment properties. So FHA requires that it be your primary residence. But what you can do with FHA is you can do either a duplex or a 3 or 4 unit. And that is going to affect your down payment. So if you're purchasing a duplex and you're going to live in one unit and rent out the other unit, then you do have to do 15% down. So it's going to require a little bit higher down payment on the rehab loan if you have a 2-unit property. If you have a 3 to 4 unit property, it's going to require 25% down. But again, you still have the opportunity to purchase the 3 or 4 unit and include in your repair costs in your purchase price.
Wonderful. So let's talk about, so you're saying that there's a $35,000 cap. Is there a cap for minimum repairs or for that limited program?
Nope, there's no minimum that you have to do. So you could just utilize the program if you wanted to, I don't know, I'm trying to think of a cheap repair to do. Are there any? Let's say you just wanted to replace all the closet doors in the home. You could do that, and only, you know, if it's going to cost $1,000, and it might not make sense to go into the program for such a small amount. But that's what I'm here for, is to look at the numbers and see if the program would make sense to do a small project like that.
Okay. So let's talk about the standard one. Is there a limited or a minimum repair associated with the standard one?
So with the standard one, you do have to do a minimum of $5,000. So there's one of the differences between the limited and the standard. So yeah, a minimum of $5,000 for the repairs on the project.
And is there a cap on that, or we just go up to the purchase price cap?
Right. We're just going to go up to whatever the FHA loan limits are in your area. That's your cap, but there's no cap on the repairs itself. So if you can buy a property for, you know, really low, let's say you bought a $200,000 home and it needed $170,000 in repairs, you're still only at 370. So you're way under that 483 for our area.
So let's just say somebody did find a house. They decided to do the specific program. Can they just choose like different contractors to do different little things there, here or there? Or do they have to have a main contractor that's in charge of the entire scope of the work?
Yes, you have to have one general contractor that is in charge of all the subs. You cannot be your own general contractor. You cannot do any self work, you know, or sweat equity as people call it too. So it all has to be done by, you know, one general contractor. If they hire out their subs to do it, then that's fine. They take care of all the subs, or if that general contractor is doing all the work themselves, but it has to be one licensed general contractor.
So is there a limit on how long that specific contractor has to take to be able to finish the project? Like, is there a limit to that?
Yeah, they do have a time frame that they have to work within. So they have to start the work within 30 days of us closing the loan. And then they have a 6-month time period to do the work. So they, you know, it's going to be a, you know, process to make sure that they fall within that time frame.
Okay. And then for people that are considering rehab loans, let's just say you found a sweet property, you think it's going to be a perfect fit for this specific loan. Should they get quotes to be able to see around about how much it's going to cost for repairs prior to, you know, pursuing this specific loan type?
Yeah, they definitely want to at least have a good general idea of how much the project and the work that is going to be entailed in the project is going to cost, because we want to make sure that you're still approved for the program. So you don't want to, you know, go in, submit an offer and say you're going to do $10,000 worth of work, but then it ends up being 30. Well, that's another 20,000 that you're borrowing, and that might put you over the threshold of whether you're going to get approved or not. So it's a great idea to have a pretty rough estimate of what you're going to do. It doesn't all have to be set in motion, of course, but just to have an idea of how much the repairs are going to be.
If you want less stress, I would recommend you get your quotes.
Yeah, yes, get your quotes. Have a really good understanding of what you're trying to accomplish.
And your realtor can help you with that.
Yes.
We know a bunch of commercial contractors that can give you some bids.
Absolutely.
So wonderful. I think that pretty much covers it. Could you add anything else that you think might be important for people that are considering possibly using this program?
You know, just if you're looking at homes and you're having a hard time finding exactly what you want, this is a good way to do it, so that you can get the countertops that you want, or maybe you can get the walk-in shower that you want. So it's a great way to finance the project. You're not then having to put it on credit cards or whatnot. So it's you know, you're still getting a lower interest rate because you're able to finance the purchase price plus the repairs into one loan.
That's a great example, you know, of like an open shower. Like if there's a specific thing that you're looking for in all these homes that you've seen,
Right.
Don't have that one little thing.
Yeah,
This might be the solution for you guys.
absolutely.
Well, wonderful.
Yes.
Next time, if you guys would love to join us, we're going to be doing this next week. And what loan type are we going to be talking about?
We're going to be talking about a conventional rehab loan. So it's a home style renovation. So it's a conventional loan. It has some different caveats that we'll talk about.
Okay. My name is Julia. I am a realtor here out of Salem, Oregon. I am with Quirke Real Estate, brokered by eXp Realty. If you guys want more information about rehab loans, please feel free to contact me. And of course, my lender here.
Yeah.
with
My
me.
name's Jen Cantu with Landmark Professional Mortgage, and happy to help with any of your home loan needs. And yeah, reach out with any questions.
We look forward to chatting with you guys.
Right.
Have a wonderful day.